Many taxpayers could see some new deductions starting this year under a sweeping federal tax bill that makes some cuts permanent and adds brand new benefits for workers. So joining us right now, we have certified public accountant Angie Brazell to break down what is changing. Angie, thank you so much for being here.
Yeah, I'm glad to be here.
So the new federal bill permanently extended kind of many of the 2017 tax cuts. It also adds some new deductions.
Yes.
What's going on with all of them? What's new?
Yeah, so the tax bill that was previously in place most of it was supposed to sunset. So at the end of this year, we were going to go back to provisions that were in place before that. So increases would have been experienced by most taxpayers, a lot of taxpayers. So that is very helpful to permanently extend all of those. But there are definitely some new ones that a lot of our taxpayers will be able to benefit from. Two of the main ones that I'm sure a lot of people have heard about is no tax on tips and no tax on overtime. Now, it's really not no tax, but that always sounds better. But there are limits, of course, to everything, not only amounts that can be taken as deductions, but also income limits. So if you're a single taxpayer filing just on your own personal tax return, if your income's under $150,000, if you're married, it'll be under $300,000. Then you would qualify to be able to exclude $25,000 of tip income from your pay. So it's still going to be reported to on your W-2. It was still taxed all year long, just like it normally would have. But now on your tax return, you'll report that income, but then subtract it back off for that tip income to be able to experience the deduction.
So what about the deduction on overtime pay?
Yeah, so overtime is interesting as well.
Yeah.
So same qualifications, $150,000 or $300,000 of income. But this one is you can exclude $12,500 for an individual person, or double that, $25,000 if you have married filing joint return and you're both receiving overtime. And for this, it is just the extra benefit that you get for working overtime that is the deduction. So most people get time and a half.
Right.
So that half is going to be what is deductible. Something for everyone to know is they did not require the W-2s to be updated for 2025. So this year when you get your W-2, it won't necessarily break out how much your overtime income was. It may. Some employers have gone ahead and put it in a certain box so that you can see what it is. But a lot of employers will be providing you with just your last pay stub or with some kind of information to go on. So if you just have your last pay stub and it says your tip income was $3,000, or your overtime income was $3,000, you have to divide that by 3. Because it would be time and a half to determine how much is eligible for the deduction.
Okay, there's a lot going on.
So just make sure you're looking at all those calculations as you're putting it on your tax return.
Angie, thank you so much for breaking this all down for us.
Yeah, thank you.
Of course. All righty, everybody, we're going to be putting all these information on our website, WLTX.com.